All right, good morning then everyone on Wednesday, the 4th of October. Um, Markets have continued. Yields continue to rally over the course of yesterday and overnight into today. Stocks continue to push lower. The dollar has somewhat paused. Maybe that is something to do with some potential intervention from the Bank of Japan. We've continuously spoke about it on these videos for weeks now. Seemingly we got that yesterday. It's not, you can see this article, the will they or won't they discussion over the yen intervention is now morphed into did they or didn't they speculation. We've had no confirmation as to whether they did or did not, but we'll have a look at a chart now in a minute and we'll let you decide for yourself. It's not very often you get a 300 pip move in the space of a number of minutes. That would suggest some intervention from the Bank of Japan. Certainly in my point of view, definitely, but I guess we're going to have to wait and see as to what they have to say once they come out and comment on it. RBNZ out overnight, Reserve Bank in New Zealand, no hike of the interest rates, which was to be expected, but they did continue to reiterate their hawkish stance with inflation still remaining too high. More needs to be done and interest rates need to stay at sufficiently restrictive levels for longer, which again is pretty in line with expectations. So we'll jump across some charts and see what's going on across the New Zealand dollar as well, but a bit of a nothing meeting exactly what markets were expecting in the overnight session. Other than that, as I said, yields higher, stocks lower. Yields higher hasn't really driven the dollar higher overnight, which you can see here. The US dollar is pretty mixed. Yields globally, higher across the board. New Zealand dollar isn't doing too much. It is it's down across all these currencies. I don't know why this ticker for Kiwi Aussie isn't working. Hasn't been working for a few days. I'm not entirely sure why, but you can see the Australian dollar higher against everything with the Kiwi dollar as well. So weakest currency across the board today is the New Zealand dollar. That goes in line with stock indexes lower. You can see the US equity futures, European equity futures, Asia Pacific equities all lower across the board. They are driven lower by yields higher across the board. Commodities then lower, drags the Kiwi dollar down with it, with expected or an in line with expectation interest rate decision last night. The Japanese yen relatively strong. I mean, not strong by any sort of massive amount. You can see small amounts of percentages higher over the course of the Asian session, which again, Bank of Japan seemingly intervening, which we'll have a look at once we get around to some charts. You see equity markets continue their move lower in yesterday's trading session, and has continued lower overnight. You can see the S&P, the Dow Jones, the Nasdaq, the Russell, all continuing lower. The DAX, the Euro Stocks, the FTSE, again, all continuing lower. The VIX continues its move higher. Look at this, and you look at this. I mean, that move in yields is insane. I mean, it just keeps going and going and going. As we said, you do not want to stand in front of that. Do you want to continue to buy at these highs, or obviously sell bonds at the lows? It's a bit of a tricky one, isn't it? I mean, ideally you wouldn't want to buy up there, but buying through any of those highs, not the worst of strategies. Selling through any of those lows on bonds, again, not the worst of strategies. It was, we're having a look at yesterday, was just the 10-year continuing its move higher, but now the 2-year as well. So across the curve, yields continuing higher, which, I mean, shows just how little markets believed of the Fed keeping interest rates higher for longer, or potentially even hiking again. So markets are waking up to that fact, or have woken up to that fact. Yields continue higher. They show no signs of slowing down just yet. But what you would expect is a further round of US dollar strength off the back of that. But you can see here it's global yields, so it's not just US yields pushing higher. Yields globally are pushing higher, which kind of removes that sort of gain from US yields, if that makes sense, or US dollar gains from higher US yields, is the fact that if everything's rising, well, then it's not exactly one positive for the US and not as much of a positive for everywhere else. So US dollar just kind of chopping sideways really since over the course of the whole day of yesterday. You can see the Aussie, Kiwi, Euro, Sterling not doing much since over the last 24 hours. You see dollar Swiss, dollar CAD, dollar index not doing much. Then you look at dollar yen. You can see briefly popped its head above 150, got up to 151.16 or 150.16, should I say. Have a look at it on a 5-minute time frame. You can see there in the space of 5 minutes, going all the way from just above 150 down to just above 147. 280 pip move in the space of 5 minutes. It's not something you see just from some investment bank jumping in and pressing the sell button. That is the Bank of Japan, you'd have to imagine, but it's straight away reversed more than half of those gains, and has met back in the middle. Has had a bit of downside to begin today's European session, but not really the expected reaction or the reaction that they would hope for. These dips being bought, and ultimately, yeah, they can intervene, but it doesn't really change the picture. I mean, they've intervened in the bond market in order to keep their 10-year yield lower, and if global bond yields rise and theirs continue to remain subdued, again, that's a further negative, but so you got a bit of a bounce back so far. I mean, ultimately the bias for that is still bullish regardless of intervention, but I mean, they call it a bit of stealth intervention. Last time they intervened, did spark a pullback across the board in the dollar. So do we see that again? I think this will be an important level going forward in today's session, the 148.70. If you can get below that, you probably expect to get a test down at these lows again, which 100 pip move, there's enough distance there in order to be able to catch some for yourself. Dollars across the board, not doing too much. Dollar yen shorts, whereas the yen longs may be worth a punt, even though the bias has not changed. The last time that they intervened, it did spark a broad rally, and there's a lot of short positions in the Japanese yen that will need to be unwound. I will have to get unwound at some point. Looking to try and play that pullback is not the worst idea in the world. The economic calendar yesterday, job openings, substantial beat on job openings, nearly 800,000 above consensus. So it's not a great thing for the labour market. May spark a bit of an uptick in the unemployment rate later on in the week. You can see NFP, unemployment figures, or labour market figures a little bit later on. Unemployment expected to tick down. Maybe as a slight tick up after those job openings figures, but that remains to be seen. We'll leave that for a little bit later on in the week. Today's economic calendar, you do have services PMIs out of the US. That weak print yesterday didn't cause any sell-off in the dollar. Has just paused the trend for now. If that beats consensus, I have to imagine that trend goes and continues. But we're after PMIs out of Europe this morning. The final figures, not the flash estimates, all below 50. Not expected to be that impactful in markets, but no high impact data really today until you get services PMI. ADP employment change can be high impact on some calendars. It is the private version of the non-farm payrolls figure, and that's supposed to be low. That's supposed to be a poor print. That goes in line with those job openings figures from yesterday. So we'll keep an eye on ADP employment change, keep an eye on the services PMI. Markets will look towards the composite and the services PMI from S&P. Sorry. But yeah, 3 p.m. today, main focus of attention at services PMI once we get around to it at 3 o'clock. But in terms of what you trade today, it's a pretty tricky one. I mean, you got to stay short on equities, I think, especially if yields continue higher. Short equities, maybe short some dollar yen, is not a bad way to play it over the course of today's trading session.